Hey guys, it's Maine here with another video for Breakout as part of the Price Action Fundamentals series. In the last video, we covered order blocks, a type of point of interest or POI. But what happens when an order block fails? That failure can actually become a powerful setup on its own. So that is going to be the topic for today's videos, breakers. So what is a breaker? A breaker is simply an order block that gets invalidated and then it flips and becomes either support or resistance in the opposite direction. So just like order blocks, there are two types of breakers. So first, you're going to have a bullish breaker. So a bullish breaker will actually occur when price is downtrending, and then you have what should be a bearish order block fail, and then it becomes a bullish breaker. So what does that look like? So as price is downtrending, it's rejecting from bearish order blocks and forming lower highs. But then one of those bearish order blocks actually fails and price ends up using it as support. This would be a bullish breaker. So it is a failed bearish order block. The inverse would be true for a bearish breaker. A bearish breaker is when you're in an uptrend, price is finding support at bullish order blocks, pushing higher. We get a fresh bullish order block here. This one actually fails, and then price ends up reversing and using it as resistance. This would be a bearish breaker. So to summarize, a bullish breaker is a failed bearish order block, and a bearish breaker is a failed bullish order block. It's not that confusing when you think of it simply like failed support becomes resistance. Failed resistance becomes support. It's just like an SR flip. Now, where might these form in price? Well, if you remember from our very first lesson, we talked about two kind of trending moves with market structure, right? We had our clear uptrend and our clear downtrend, but then we also had the change of character, which is when price switched from being in either an uptrend to a downtrend, and it was a reversal. Generally, these reversals are going to include those breakers because you're in an uptrend here, you have bullish order blocks supporting price, and then you have a failed bullish order block, price flips it, it becomes resistance, and at the same time, you're getting a change of character. So you see how they kind of all fit together here? Bullish and bearish order blocks are going to be used when the market is trending. Breakers are going to be used when the market is reversing or switching trend. Similar to order blocks, don't overthink this. It's going to be very obvious whether or not a candle is a breaker or not. If you're unsure, you're debating, it probably isn't. Again, the same as with order blocks, we want to be looking for something that is clear and there is an impulsive move telling us that it is a good point of interest to use. So let's actually look at some examples in the real chart here. So this is a perfect example of a bullish breaker, which is a failed bearish order block. So here on Bitcoin, you have an up candle before a down move that breaks market structure to the downside. You have a big expansive move. So by all accounts, this is a bearish order block here. When price comes up, initially you would expect price to reject here, form a lower high, continue the downtrend because this is a bearish order block. But you can see here, price breaks through this candle quite impulsively and then uses it as support. This bearish order block has now become a bullish breaker. Once you understand what these are, you're going to see them all over the place in price. We had another one here on the weekly chart here on Bitcoin quite recently. We have an up candle before a down move that broke market structure. By all accounts, this is a bearish order block. Price impulsively breaks through it and then ends up using it as support before trading higher. This bearish order block has become a bullish breaker. So that downtrend, right, has become an uptrend. We had a change of character. Just like we showed at the beginning of the video there, breakers are often going to be signs of reversals. Now let's check over on ETH here and show you some examples of bearish breakers. Right here, you can see a down candle before an up move that breaks market structure. This would, in theory, be a bullish order block. You can see price nukes straight through the level and ends up retesting it, and what was support or should have been support now becomes resistance. This is now a bearish breaker. Same thing here. This is a down candle before an up move. You'd expect this to be support, as it fits all the criteria of being a bullish order block. Price nukes through the level impulsively, comes back up, uses it resistance. This failed bullish order block becomes a bearish breaker. So what you'll notice here is this retest opportunity, that's actually where we're gonna look for our entries when using a breaker. We're going to be looking to trade this change in direction. So how do breakers fit into the system that we've shared so far? Remember, we start with market structure. High time frame market structure, that's going to help you determine your bias. If we're bullish, we're looking for higher lows. If we're bearish, we're looking for lower highs. Points of interest, refine where those higher lows and lower highs might form. Order blocks were the first POI we covered. Breakers are the second. They show when the wrong side of the OB fails and flips to support our bias. So here's the schematic so far. If we have a bullish high time frame market structure, right, we're looking for higher lows to form at bullish order blocks, right? High time frame market structure is up. We're looking for these higher time frame, higher lows to form at bullish order blocks. Now, if we get a reversal and a change of character here, that reversal oftentimes is going to be characterized by a breaker where we had bullish order blocks on the way up. We now have a failed bullish order block that has now become resistance. That is a bearish breaker. And this is where we would go and hunt for that potential short entry on the low time frame. So just like you're looking for longs here on the way up, once you get this flip, you're now using that to look for shorts. The inverse would obviously be true if you had bearish market structure on the high time frame. You're looking for lower highs to form at bearish order blocks. You get another breakdown, and then lo and behold, one of those bearish order blocks fails. It becomes a bullish breaker. Price is reversed. You've had your change of character, and you're looking for that to be a long opportunity, and then consequently an uptrend to form after, and new bullish order blocks to form. So let's talk a little bit about risk management. One of the reasons you don't go all in at the first point of interest is because, just like we've discussed in this video, something that you thought was going to be a bullish order block can fail and it can become resistance. So if you're going all in, longing this bullish order block, and it fails, you're gonna have no money left to potentially trade it as a now bearish breaker. So if you take your entry number one here at the bullish order block and you get stopped out, you can then reassess and say, you know what? This is now a bearish breaker. We've broken below it. I'm actually going to look to short the underside. So you're kind of getting a second bite at the apple here. You're getting another chance to get an entry. So let's summarize here the difference between the two POIs we now know. A bullish order block is going to be the last down move or down candle before breaking upside in the direction of your trend. So if price is trading higher, we're going to be looking for the last down move before a break in upside in that same direction. This is going to be your bullish order block here. And if we're looking to trade a bullish breaker, a breaker is an order block that fails. So you have your bullish order block potential here. Here's your down move before break upside. You mark it out, and then this fails. We're then looking to trade it in the other direction, and this would be a bearish breaker. So it's an SR flip. It's a failed bullish order block. So a few tips when trading with breakers. Again, similar to order blocks, we want to focus on clean, impulsive failures. Anything that seems choppy or you're unsure of, just skip it for now. You can use the opposite side of the breaker as your invalidation. So just like we did on order blocks, where you can enter the order block and use the other side of the order block as your risk, you can do the same thing with a breaker here. So on this example on ETH here, when we break through there, when you long this retest here, your stop can be just below the other side of the order block. Same thing here on Bitcoin. We have our clear breaker block. Price breaks through. There's your retest. Your stop can be the other side of the order block. If you can't clearly see the order block failure, don't force it. We want to see a clear impulsive move. Don't diddle in the middle. Don't deal with chop, okay? So remember, guys, our order block shows us where the higher low or lower high should form. The breaker allows us to act if that doesn't end up happening. So remember, we have our high time frame market structure. We expect this market structure to continue and to order blocks to get respected. And we can use each of these order blocks as an entry. However, if an area that should have been respected, a higher low should have formed there and it doesn't, breakers allow us to still find a trade even though our initial order block failed. So before we knew breakers, if the order block failed, you're kind of like, okay, maybe the trend's over. I got to wait for price to start trending again. Breakers allow you to take advantage of that failure and actually trade that trend change. So that's all I got for this video, guys. Now you have a good understanding of market structure, order blocks, and breakers. In the next video, we're going to cover fair value gaps, another POI that works hand in hand with order blocks and breakers. Thanks as always for watching. Make sure you're subscribed to not miss the rest of the series. Also give us a follow on Twitter and make sure to join our Discord. I will talk to you guys in the next one.